Welcome back, everybody. Sive here with ForexPeaceArmy.com. As usual, let's keep up with the analysis of the coal market. So yesterday we talked a lot about the patterns that are forming right now on intraday charts. We in detail explains why the bottom that we see, performance on the hourly chart, on the fall time frame chart, has a special bullish features, which suggests that probably pullback could start right from these lows. Although we can't guarantee that it will be a big reversal, but at least it looks like the real bullish performance. And indeed, yesterday we've got the action to the upside. On the daily chart, of course, we would be happy if this action would be a bit higher. In this case, we could get another grabber in these points, as we discussed yesterday, but currently we haven't got it. I would say even more that nominally the trend remains bearish on the daily chart. But this minor crossing, I wouldn't overestimate it yet. So because we are following a particular pattern, and even without the trend direction, we do know in advance what actually potential levels we need to keep an eye on and what will happen if market will not able to stay above them. So this is usually happens when we are following with some particular pattern. And this is head and shoulders, right? So on full time frame chart, you could see what's going on. So as we said, market stands in a level of the last resort. This is the final point where the bulls have chance to change the situation and start moving with the pattern, keeping it alive. If market will return right back down and drop below these lows, that will tell us that probably all the structure will fail and market will drop below the 38.85 area, which suggests deeper retracement on the daily chart as well. So as you understand, these lows are very important, but at the same time it makes overall process to deal with this situation much more simple, as we just know where the invalidation point stands. We know big pattern, right? So all that we needs to do is just to get the entry point against these lows and then see what will happen. This, of course, if you in general would like to go long on the gold right now. So if you're bearish, in this case, it will be better to watch for failure of this construction. Or maybe if you prefer to act in advance, so maybe you could think about using the stop sell order. So if somehow suddenly market collapsed, you will step in the moment when the market will take it out of these lows. It's one of the way that you could follow until this pattern is still valid and potentially keeps chance on the possible upside performance. It would be better to not consider taking any short position. Besides, actually currently we do not have a sufficient context to do this. Finally, on the hourly chart, a picture looks very similar to the euro currency. A shape a bit different, but the pattern is the same. So you could see that if euro currency stands right now already on the right arm, gold is just moving to it. So here this upper direction market come close to the supposed neckline, and if you like to enter, those of you who have taken position here, as we suggested, now already have good position, you do not need to do anything. Diversion still stands in place. Now just keep an eye on the possible retracement. I plan here just 618 support because it corresponds to the left arm, but you also could use maybe slightly higher standing levels such as a 40-50 for instance, which is a 50% support. So just keep an eye on any retracement that will be looking like the shoulder in the current construction. So invalidation point right here, everything looks very simple. Just you need to make a decision whether you would like to take the part in all this mess or not. So that's probably all for now. Let's see what the progress will be today's session, and tomorrow we will see maybe we need to adjust something, or as usual just take a look what's going on.